Hey guys, Boris Schlossberg from BK. Great to be with you. Welcome to our weekly Scalping University series. As always, please note the following video is for educational purposes only. No claim is made as to the accuracy or efficacy of any trading strategy contained in this video. And as always, do your own research. I want to start this week, which has been just an incredible week for anybody who has traded because of the volatility that we've seen in the currency markets. Explaining to you what I specifically tried to do to combat and battle the massive amount of volatility risk that existed in this market. This is, for example, of course, right now I'm recording this on Thursday, not on Friday, because I really wanted to kind of capture the incredible movements we've had in the market last night. Last night being the night when the yen dropped to all-time lows, broke through like 4 handles in a matter of 5 minutes, and just created pandemonium across the currency markets. And the first and foremost thing that I kind of wanted to show you, let me just actually get rid of my chart. Hold on. Sorry. Okay. The first and most important thing I kind of wanted to show you was that my scalping methodology, which basically trades in $quarter dollar increments. So we're trading from 0 to 25, 25 to 50, 50 to 75, 75 to 00, with a 25 risk and a 20-point target, which I've described many, many times before in all my prior videos, really focuses on 2 key distinctions, which I have shown and shared with you in my Twitter account many times over. I prefer to always, when things are relatively equal, to trade to the round number. That is, trade from 75 to 00 or from 25 to 50, rather than trade through the number for various reasons. Because I think when you're trading to the number, you have a higher probability of reaching your target, and the number itself sometimes acts as a source of resistance or support. And I'll show you a couple of examples of this as we go on. But the second and the single most important factor that I want to share with you is that I traded incredibly tight, both in terms of targets and in terms of size. I traded at sometimes 1/5, as little as 1/5, but very often at 1/3 to no more than 1/2 my regular size during all of this volatility. The general rule is the greater the volatility, the smaller the size. What almost everybody makes the mistake on is they try to make larger size on larger volatility, thinking they're gonna make money, and in fact they wind up just getting killed by doing so. So the first trade post of this was not in the dollar yen because it was just too volatile, but it was actually in Aussie dollar, and it was a quick comeback. We had sort of risk stabilized for a little bit, and we had a quick comeback, and I traded the 75 to the 00, and I actually, as you see, I tightened it up to like 95 in the Aussie dollar. Then I came back online when I woke up after Asia, and I saw that risk had started to sell off again. And here again, a very small but a meaningful move from 98 to the 00 on the Aussie, trading to the number. You notice, by the way, how the 98 handle held here. Watch how this holds in the Aussie, and trading through the number would have been much less productive than trading to the number, which is what I did over here. An example in the pound today, I just want to show you. I will occasionally trade through the number when the move is second, not first. In other words, watch the pound here. Here the pound takes out the 61 as risk really starts to come back in early European trade, right? It takes out 61 and then retraces back out. On the second bust through the number, that is meaningful enough for me to want to take the trade, because if the trend is strong enough to want to challenge the round number for a second time, I'm willing to take the gamble and run through the number instead of to the number. Of course, here I actually didn't even get a chance to trade 25 to 50. It was so fast, there was so much movement here, and I was so preoccupied. One of the sort of frustrating things about trading high volatility markets is so many things are going on that you probably are only able to take 1 out of 3 possible trades, which is fine. It's just the critical thing is you want to make sure to take the trades that you really have a strong confidence in. But I think the most important thing I want to show you is, because all of you watch my commentary on the euro, is to show you how this particular philosophy really worked itself well in the euro. Here in the euro, I'm trading to the number 75. 75 actually almost stops me out. We have a big move through 75, then a retrace. Middle East comes in, buys a lot of risk after essentially the story in Japan stabilizes. No more excessive radiation leaks. They're going to bring in water on the onto the nuclear power plant. So all of the stories started to stabilize a little bit, and I take the 75. It retraces back out on me, but then boom, takes me out again. I tighten up my targets here. I'm trading very tight to like a 95 instead of, excuse me, to a 90 instead of a 95 because I want to make sure I'm banking trades. Then I see it challenge the 40, and at this point, I take a small position because I think it's worthwhile for me to see how it trades through the 40. So it does take, I do kind of take my first move through the 40. It trades very, very well, and then it gives me confidence that if now we're going through the 25s and we're going to try to challenge the all-time the all-time highs of this year, that I'm definitely going to try to take that trade, and I take that trade all the way up to just underneath the all-time highs. Again, here, notice that I am always trading just underneath the number, 295 instead of the 00, to 45 instead of the 50, both cases to ensure that I'm going to bang in my profit. Now, last thing I want to show you is that I remember I showed you that to the number very often can be support. So if you today we had relatively strong or modestly strong U.S. data, which was positive risk. I thought that was going to hold up stocks. No bad news out of Europe coming out. So when the prices trickled down to the 40s, I was actually a buyer here. However, it popped back up. I took a nice tight profit, but had I held on, it would have drifted against me, but still would have held my stop and recovered and moved again, almost to challenge the yearly highs over here. But notice how the number in an uptrend will hold support most of the time, and the number in resistance will be, excuse me, the number in a downtrend will be resistance most of the time. And that's why it's very important to buy at support instead of trading through the number on a momentum trade, and buy to the number on a momentum trade continuously. All of this, I think, needs to be complemented with one key fact. Ever since I lowered my leverage to no more than 2 to 1, that means for every 100,000 in the account, or 10,000 in the account, or 1,000 in the account, however you manage it, I'm only trading 2,000 notional, or 20,000 notional, or 200,000 notional. This is what has happened to my account. I want to show you my equity curve from the beginning of the month in percentage terms, which is the best way to look at it. There's about 500 short-term trades, and one of the key things I want to show you is look at, first of all, yes, it's exactly the kind of a curve you want to have, a sloping right-hand curve. But here's the key thing: from 3% to basically 1.5%, 1.5% maximum peak to valley drawdown against a 0 to more than 5% gain. And notice my gains. This is my gains all the way through the meltdown. Look at how tight my equity curve is. It's as tight as my leverage. It's as tight as my targets and my stops. I do not allow myself the risk of getting stopped out, killed out, blown out of my account. I trade small, I trade tight all throughout this meltdown, and that is how you can scalp through the single most volatile market we've seen in a very, very long time. So I'm wishing you the best of luck. Everybody who isn't following me, follow me on Twitter or see us at bkforexadvisors.com. We'd love to have you there. Next week, hopefully the markets calm down. We have more trades for you, and I'm wishing you the best of luck and the best of trading. It's Boris Schlossberg, over and out.